Welcome, welcome, welcome. It is Tax Tea Thursday with Tish. It is cold in my office. I turned on the heat, but it's really not kicking in, so that's why my my jacket was buttoned up to my neck. It's cold. Happy Thursday, everyone. Happy Thursday. Thank you all for tuning in. Tax Tea Thursday with Tish. I got some great things to share with you all tonight. Some more tax education and some more tax tea from the streets. And I also have something special for you all as well. I'm waiting for people to join. I know people were saying that they wanted to join me tonight. So I'm just trying to give people time to hop on. If you are in the room tonight, go ahead and drop a hey in the comments, because tonight I have a lot to discuss and I am going to try to get it wrapped up within about 35 minutes. So hopefully that works. Again, thank you all for joining Tax Tea Thursday with Tish. I definitely appreciate you all joining me each and every Thursday at 8 p.m. Central. I thought about pre-recording these because I was late last week because I was dealing with the client and I was like, maybe I should pre-record for future reference. But I really just like being live with you all. And plus it just gets me comfortable with my audience as well. Go ahead as you come in the room, make sure that you put what's up, hey, what's going on in the comments. It is pretty cold here in the Metro East for it to be the first day of spring. Are you guys excited about the first day of spring? I know I am. So yeah, let's go ahead and get started because I do want to wrap this up in a timely manner. Again, for everyone who do not know me, welcome, welcome, welcome to my segment that I like to call Tax Tea Thursdays with Tish. My name is Letitia Wilson. I am the owner of LC Financial Solution. I am your tax and wealth strategist where I help high income earners and business owners maximize their wealth and minimize their taxes. That's what I do. So tonight we're going to be talking about how the rich stay rich and how people can pay $0 in taxes, right? So this year, I definitely can say that it has been more frequently than normal from my last previous tax year's experience that people are owing the IRS. And typically it's really not a small amount. Like I've had clients owe at least $2,000 to the IRS. And so tonight I'm going to just talk about how the wealthy pay less in taxes, and some strategies that you can use now and in the future, right? So one thing that the wealthy use, to pay less in taxes is to start a business, right? Even if it's a side hustle, something that you do on the side in your spare time, right? That is one of the biggest hacks is business ownership. Wealthy business owners, and new business owners, have access to way more deductions than just your normal W 2 worker. And of course, as I explained before, if you are just an employee, you are able to write off some deductions, but it's not as many as it is for business owners. So a lot of times you will see the wealthy start, producing businesses within the family, so on and so forth. So, of course, when you start a business, there are multiple deductions as far as, travel, home office, supplies. If you have more than 5 cars, hey, Sierra, if you have more than 5 cars in a business, is considered a fleet. So, you don't actually have to track your mileage. You'll just be able to take those expenses that you have for each vehicle, right? You're also able to deduct dental and health insurance premiums and even retirement contributions. Now that is limited to if you make a profit in your business, right? So a lot of these deductions you are able to take, but some deductions, especially like when you pay your health insurance premium, or retirement, sometimes that doesn't count as a deduction if you make a loss in the business, meaning that you did not make a profit for that year. You can even write off payroll taxes, in a sense, and your W 2 employees, if you do have employees. And if you don't have employees, you can write off contractors, right, as an expense. So, like I said, one of the ways that the wealthy pay less in taxes is starting a business. Again, even if it's a side hustle, we're not saying go out here and get a $30,000 loan or anything like that. Just start you something that you may think is a hobby and could possibly make money from it, and then you want to go ahead and start from there is getting that business, and then also getting those deductions, because even in a first year business you do have startup costs and organizational costs that you can write off as well, up to $5,000, without it having to be carried forward into the following year. So that is one way that the wealthy pay less in taxes. The second thing that we're going to talk about tonight is leveraging real estate, right, for tax wealth. So real estate is definitely a game changer, right? There are plenty of tax code rewards for property owners with depreciation, 1031 exchanges, and cost segregation. So if I just said a lot and you don't understand everything that I said, when you invest into real estate, you can do a 1031 exchange, which is basically, if you were to sell a property and just say you made a $50,000 profit on that property, but you can take that entire $50,000 and go get a new property, and you wouldn't have to pay any taxes on that $50,000. The taxes will be deferred because at that point you did make a profit if you used all your money for investments. I guess that's the easier way to say it. So for a 1031 exchange, if you sell a property and then you use all of the money that you had from that property, and you do go out and purchase a new property, then you don't have to pay taxes on that $50,000 that you incurred from the sale, right? You can just defer it later on. But that is not as easy as it sounds, because at that point you would need a third party in between you to actually receive the funds. So you don't want to actually take the funds from the 50,000 and then go do a property. You kind of want to have like a trust account, or there are actual professionals who can basically handle the money for you. It's just basically somebody, a third party, that takes the money, and then you can go ahead and use that money to go ahead and invest into properties. Even short-term rental, like Airbnbs, things of that nature, you can use that as a tax write-off, and you can use the Augusta rule. Now, the Augusta rule I think is pretty cool. It's basically saying that you can rent out your property for up to 14 days and you don't have to pay taxes on that money, right? That's the Augusta rule. So if you haven't heard of that before, look that up. I know some people, depending on where they live at, they could rent their home out maybe for some type of big event that's coming in town. I know like Rick Ross, for instance, he does like his car show every year at his home. And so if his neighbors were around him and if they just wanted to leave because they didn't want to deal with all of the traffic, they could rent their home out for that time being, even if it was 3 or 4 days. They can rent their home out, make the profit from that, and then they don't have to pay any taxes on it, which is pretty good. I mean, especially if you can charge, $5,000-$6,000 a night, right? So again, like I discussed, the steps that keep the wealthy from paying taxes is either starting a business, investing in real estate as well. And then the third one that we're going to talk about are retirement accounts and tax shelters. So the rich don't just save money regularly. Through a 401k, they use advanced tax strategies like a Roth IRA, a self employment pension plan, even IULs, which is basically Index Universal Fund, as well, to have a lower tax bracket. So when you contribute to your Roth IRA, of course, it's tax-free withdrawals. I kind of like an IRA because you use your after-tax money to go ahead and pay for your retirement. And then once it's time for you to withdraw money from your retirement, you don't actually have to pay taxes versus a regular 401k is where you don't pay taxes now, but you pay taxes later. And I just don't want to pay taxes when I'm like 60. So I'm like, take the taxes now. And then when it's time for me to withdraw my money, it's tax free, especially when you don't know how the economy is going to be, especially when you retire. Even the economy now is really up in the air. Um, and one of the tax strategies that you can use when it comes to retirement, again, is the Roth IRA. The maximum contribution for 2025 is $7,000. And if you are 50 plus, it is $8,000. There are a phase out. So if you are a W-2 wage earner, for single, I believe the phase out starts at 146,000. And when we say phase out just means that the amount that you initially allow, which is the $7,000, it start to decrease with the more money you make, right? So sometimes it's a good thing, sometimes it's a bad thing. And of course, if you're married, filing jointly, that amount doubles up. And so with the Roth IRA, you are contributing after tax dollars, right? But the withdrawals are tax free in retirement. So you go ahead and pay the taxes on it now. If you look at your check stub, you will be able to see it's like a pre-tax section on your paycheck stub. And if you do have the Roth, it'll show how much they have taken from there. But you pay your taxes now with the Roth. And then once you actually withdraw it for retirement, you are able to take that money tax-free. So that's a way to look at the future because, again, when it comes to wealth building strategies, it is not something that is done overnight. It takes planning. And then also you want to think about those short-term and long-term goals that you have. So for me, my retirement is a long-term goal. So of course, I'm not looking to pull from my retirement now. So I'm trying to find the best benefits for me personally, and strategies to help me along with this. Yes, Sierra, I love a Roth IRA. It's like one of my favorites. Besides the HSA, which I talk about a lot on this channel. Another retirement plan that you can use, of course, is the traditional IRA 401k retirement plan, where the contributions may be tax deductible, reducing your taxable income. So if you use a traditional IRA, right, you can basically take the money that you put into it, and then it's tax deductible on your 1040, which is your tax return. Now, you're unable to do that with your Roth IRA unless it's with after tax dollars after your paycheck, right? That's the only way you can deduct from that. But if you invest if you just have a basic 401k plan, it does help reduce your taxable income, and then it also lowers your tax bracket. But again, with the money that you put into a 401k, that money is not taxed now, it is taxed later. So I don't want my money taxed out of retirement. I want my money taxed now. So when I am retired, I don't have to worry about paying it. It'll be tax free for me. Another retirement plan that you can use also to help lower your tax liability if you are a business owner is the self-employed business owner plan, which I love, 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 love. Because if you are self-employed, you can write off up to 25% um, of your profit basically as contribution to your retirement plan up to $69,000. So if you made $100,000 profit in your business, you can take 25,000 of that and put it into your retirement plan. Sierra asks, what companies do you suggest business owners to go through if they want to start a Roth IRA? And I would suggest LC Financial Solutions. We do offer those services. Actually, that is a new service that we have implemented this year, where we are able to offer those retirement plans to business owners, to where we can sit down and strategize basically what is your long-term goal and what is your short-term goal, because each retirement plan is different for everyone, especially when it's based off of your goals, and what you want your future to look like, or what you want your now to look like. So I would definitely say LC Financial Solutions with the retirement plans for business owners. We can definitely help you out with that. And of course, if you have your job, you can use the company that they supply you with. I do have a 401k or a Roth IRA with my W-2 employer. For those who do not know, I am still employed as an HR recruiter. And so I use Fidelity for that. And that's not a shout out to them because I didn't even get paid. So I shouldn't have even said that. Hey. But yes, LC Financial Solutions, we can definitely help you set up for that. And as I mentioned before, a way that the wealthy stay wealthy and pay $0 in taxes. Again, is setting up that self-employed 401k plan, because you can contribute up to $69,000, or which is 25% of your income, as long as you make a profit, right? So you cannot take that expense if your business went into the negative, right? You would not be able to write that off. So I don't want people to think like, oh, well, I made $100,000, so I'm gonna put $25,000 into retirement, and then the $75,000 that's left, I'm just gonna write off expenses and then be in a negative. Then it won't count, right? So you don't want to do that. And then you can also, if you are a full-time business owner, you can even write off your health insurance premiums, but that will get forward over to your 1040. And I do not offer health insurance premiums at this time, even though I do offer life insurance and retirement plans. But there are actually specific health insurance plans that you have to go through. Just like now with Medicaid, they have the healthcare marketplace, I believe that's what it's called. When you are a business, you have to basically go through a certain provider to obtain your insurance, and then you are able to deduct it that way. And another great tax benefit, which I love, 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 it is the HSA, which is a health yields. I'm sorry, not health yields, health savings account. Again, like I said before, for 2025, if you are individual, you are allowed to contribute up to $4,150. I believe, for that. And then of course, if you a family, it doubles up to $8,300. So I love a health savings account, again, because the contributions are tax deductible. The money grows tax free. You are able to use those health savings accounts, of course, for any medical expenses that you may have, any doctor co-payments. And again, like I mentioned before, there are websites that specifically offer HSA products, where you're able to get feminine hygiene products. You can get deodorants, you can get foot soles, almost just vitamins even that you can get with the HSA. So I definitely love that, because again, I don't have to pay out of pocket for necessities that I need as a woman. And of course, after the age of 65, if you still have your HSA, you can take money out of that, and not use it towards anything that has to do with your health. But of course, that's once you reach the age of 65, which if you are a W-2 employee, it's still great because if you have that HSA, you can continue to add money to that account, right? And it grows tax free. So then when you do turn 65, you can have an X amount of dollars in that HSA that you can use for anything. You can use it to buy a vacation home. You can use it to go on vacation, buy a yacht, anything like that. And it's tax free and no penalty. So, as of right now, since I am under the age of 65, if I was to take funds from my HSA and not use it for anything medical, I would have to pay a penalty fee for that. Um, and I think it's like 10%. It could go up to 25%, right? And so we don't want that. Another wealth strategy that the wealthy use to grow their money tax free, again, is life insurance strategies. Mainly, the main one is an IUL. It grows tax free. You have tax free withdrawals and tax free transfer. So a lot of people are probably wondering, what is an IUL? So an IUL is an index universal life insurance policy. It's basically a permanent life insurance policy with a cash value that builds cash value over time. So the cash value is basically your life insurance premium policy earns interest as you pay on it, month by month, and because that money is invested into the index like a S&P 500. But the good thing with that is once if you invest your money into IUL, it's non-volatile. So basically, if the stock market goes down, your money doesn't go down, right? But if the stock market goes up, your money goes up, but it only goes up to a certain percentage. So it's not really like you're totally invested into the stock market. You just make kind of money off the stock market, right? So you're protected from market losses with the IUL, which I think is great because if you do want to invest into stocks and things like that, but of course, with stocks, it goes up and down. You can lose money. I know I purchased Carnival stocks right at the pivot of COVID. And I think I purchased them for maybe like $8 or so a stock. And of course, after COVID, they shot up. And then once COVID kind of ended, they fluctuated, and so I ended up losing money. But if I would have took that money and had me a IUL, which is basically a permanent life insurance plan, I could be paying monthly, right, on my life insurance that I could have, and I could have possibly made more money with that. And then if I did, guess what? I could take that money out, as a transfer or withdrawal, and that will be tax free. Versus if you take it out on the stock market, of course you're taxed because you made a profit, right? So the money inside of a policy of the IUL, it grows tax free and you can assess it without penalties. So if you are interested in an IUL permanent policy, definitely reach out to LC Financial Solutions. Send me a DM, just depending on where you are watching this from. Go ahead and send me a DM as well, and we can help you get started on a policy. And honestly, I just think that is one of the best type of policies to have because again, it's a cash based. Um, it builds on cash base, right? So you get that interest when you're paying your life insurance. So not only are you paying your life insurance to be covered, throughout your life, you have this interest growing on your money, and within 10 years, you can take out $10,000 to $20,000. Now, granted, if you have $100,000 IUL policy and you take out 20,000, of course that leaves you with 80,000 just say if you was to pass away the next day, then your insurance policy will still be at 80,000, which is still enough, to have the proper burial that you would like as well, and even still take care of your kids. But with me personally, I want $1 million policy so my family can be taken care of whether I am here or not. But yeah, that is one of the ways that the wealthy pay $0 in taxes. Again, investing in different retirement plans, investing in a business, investing in real estate as well. There are other strategies as well that you can use just depending on your outcome of life, I would say, depending on what your main goals is with life. So if you are interested in maximizing your wealth and minimizing your taxes, make sure that you set up an appointment with LC Financial Solutions, and we can get you a strategized, personalized plan to help you, of course, maximize that wealth. And I want to keep this under 30 minutes. So I have some notes. So I'm trying to keep everything under 30 minutes because I did want to talk about a couple other things with you all. Somebody said, when doing life insurance, how is your policy amount determined? So it's a few factors with that. Zara, thank you for asking that question. So when you have life insurance, depending on the policy you want, there are different type of policies to where you have a term policy and you have a whole life. So with the term policy, it's basically saying like you're covered up to a certain age, and then once you hit that age, you can basically get another term policy. But at that time, if you get a term policy now and then you have to renew it again, like when you're like 50, the premium may go up based on your age. And sometimes when you have, depending on the company that you are with, sometimes when you have that term policy and it expires because you've had it probably for 10 to 15 years, that money doesn't roll over into anything. Sometimes, just depending on what type of policy that you have. So if you get that permanent whole life policy, you are able to use that money that you pay monthly. A portion of that money will go into basically like investing, and you build interest off of that. And so the policies are typically based off one, age, and health. Of course, if you ever smoked, if you're diabetic, if you had any major health issues, that can affect the amount of the policy, right? So there are different companies or providers, I should say, that I have within my network, to where we will be able to offer the best policy for you. Again, based on the amount that you want to have for coverage, whether that's, $50,000 in a policy, 100,000, or even $1 million, right? So again, the premium policy is based off of your health and your age. Typically for men, the policy tends to be a little higher due to the fact that they feel like men are more riskier, especially when it comes to the type of jobs that men typically have in society, which is like truck driving, construction jobs, welding jobs, things that they can really hurt themselves from. So if you are typically, when it comes to men getting an insurance policy, their premiums could be a little higher. But again, we can definitely set up a meeting to where we can talk about your overall goals when it comes to having those life insurance plans and what you want that to look like for you and your family in the future. Thank you for asking that question. That was great. So I'm going to wrap up the segment of why the wealthy stay wealthy and pay minimum in taxes. Like I said, they have businesses, they have real estate, they have these retirement accounts, right? But I am going to give you all 3 things that you can do starting today to help minimize your taxes. The first thing that you want to do is adjust that W-4. If you are a wage income earner, adjust that W-4. A lot of people typically do not pay attention to that. Excuse me. Adjust that W-4. Make sure that you have the maximum amount to come out possible. So if you do owe taxes for this year, next year, we don't want the same thing, right? We want to learn from our mistakes. Adjust the W-4. Track your deductions. If you are a business owner, make sure you track those deductions. If you are an income earner, making sure you're keeping up with your property taxes. If you paying state and local taxes. If you have high medical expenses, because sometimes you can write those off, and then that deduction can be higher rather than the standard deduction that the IRS offers you. And like I told people before, the standard deduction is the amount of money that you can make without being taxed. They basically take it from, if you made 50,000 and the standard deduction was 20,000, your taxable income is 30,000. So that is the amount that you can make. But if you were to say have more than $20,000 when it comes to medical expenses, property taxes, and things like that. But remember, For the state and local tax, if you do pay state and local tax, the maximum amount I believe is 10,000 that you can write off for 2024. So, as I wrap that up, I wanted to talk about my April budget challenge that I have coming up. I'm so excited and I just can't hide it. So for the month of April, April is Financial Literacy Month. If you have not signed up for my email community, make sure you do that because I send out weekly emails with tips about taxes, financial planning, and budgeting every Tuesday. But for the month of April, I am hosting a 4-week budget challenge series that I will discuss live every Thursday for the month of April. For the entire month, I believe it's 4 Thursdays in April. So each Thursday in April, I will still do Tax Tea with Tish, but it'll be based on budgeting. So I am doing a 4-week series budget. For those 30 days, we're going to track our income, our spending habits, and to see what we spend as well. I'll be sharing daily budget tips and weekly check ins with you all. And we'll focus on that unnecessary spending and expenses that you all do. And we want to help build smart financial habits, right? So if you check in the comments, I have a link in the comments that you all can check out. If you want to sign up for it, I also have it on my business page and I will be posting it tomorrow. But if you are interested in the budget challenge, you can go ahead and shoot me a DM. And I'll be able to send that out to you. But again, this is free, so there is no charge for this. The only thing I ask is that you come to class on time every Thursday, because although the lives are recorded, you want to get that in-person live session. Thank you. Thank you. So again, for the month of April, April is Financial Literacy Month, and I will be discussing the budget and how you can build smart financial decisions. For the month of April, you have to bring a class, a notebook. We're taking it back old school. So you want to have a notebook, pen, pencil, whichever you feel comfortable with. You want to make sure you print off because we want to have a physical copy in our hand. You want to print off your last month bank statements. And then you also want to print off your most recent check stub. Now, of course, I'm not going to see this because we're going to be virtual. This is for you to see, for you to actually print out and see where your money goes. So each week of April, Financial Literacy Month, we will be discussing how to budget. I did add in a chat. I don't know why it's not popping up, but I did add in the chat the link for that as well. As you can see here across the screen, I do have that. Send me a DM, go on my business page. Everyone knows the LC Financial Solution that I will be doing a 4-week budget series. This is 4 weeks. So every Thursday, we have to hold each other accountable. And I also have a separate community that I will be adding additional tips, tricks, and hacks in that I may not get to on the live, but I'll be discussing it in my private Facebook group. So if you are interested in the budget challenge, you can just send me a DM and just say budget. I'll go ahead and send you the link, sign up. Again, it's free. If you know anyone who's interested in joining this budget challenge, you can go ahead and send them the link as well, because of course, each one teach one, right? LC is about, maximizing that wealth. And so in order for you to, I feel like, understand your money, right, or master your money, you have to master your budget. You have to know where your money is going. You have to know how you're spending. If you wanted to be able to invest in your future and say, okay, you know what, in 5 years, I want to drive a Bentley. Okay, so what are we going to do within those 5 years, right, to help you drive that Bentley? So we got to be able to open those books, those finances, to go ahead and sit down and plan out. So within these 4 weeks, I'm going to be teaching you all how to budget without feeling like you need a budget planner or an Excel file. I'm going to teach you how to do it straight old school, pen, paper, and a notebook. So that should be exciting. So I cannot wait. I'm going to be sharing it on my page. I might share it tonight once I get off live on my personal page, but it's definitely on my business page. So if you go ahead and check that out, you'll be able to see that I will start that budgeting series in the month of April, but you want to go ahead and sign up now because I will be sending out like a welcome email just to remind everybody and everything that you need to bring so we can maximize this wealth. If you want to be a millionaire, I want to be a millionaire, and I want y'all to be a millionaire because I don't want y'all asking me for my money. That's not what we doing. Okay, I'll give my 10% to God, and that's it. I don't know nobody else. Okay. So yeah, join me. Like I said, April, 4 weeks budget challenge. We're gonna get it going. We're gonna build wealth. We're gonna open up those bank accounts. We're gonna see what's popping and how we can save money and time. Right? We want to be able to spend our money wisely, especially in this economy. And so, the last final thing I am going to talk about here is the tax tea in the streets. So, y'all know recently I've been adding different, what can I call this? Different topics to talk about, right? So, I've always make this educational, but I do want to be a little bit entertaining as well. And so we are adding tax tea in the streets, is what I call it. And so the tax tea that I will be spreading in these streets is in the streets of the United States Department of Justice. So in these streets, I got some tea going on. And so so tonight's segment, we're going to just be talking about an Illinois doctor pleading guilty to evading approximately $1.6 million in taxes, right? So he pled guilty for hiding assets and lying to the IRS about basically having the ability to approximately pay the money, taxes, and penalties and fees that he owes. And so this was in Illinois. Again, if you go on the Department of Justice website, you'll be able to see the same article. So it was a doctor who basically was making a lot of money, and he had rental properties. He put the rental properties in his kid's name without the kids knowing, but he was still receiving money from the rental property. It was a few $100,000 that he received off of these rental properties for money that he wasn't claiming, right? And he also did a transfer of funds that he had. I believe it was around $600,000. He transferred money from his bank account in the United States to a bank account in India because he was trying to hide some money, which is crazy work, right? So he wanted to do that, of course, to fraudulently reduce the money that he would have to pay to the IRS when he had to submit documents about the money that he owed. So he was already getting letters saying, hey, you owe the IRS this money. Excuse me. So one, he messed up because why? He didn't have a tax strategist. You are a physician making six figures and you have rental properties. You should have had a tax strategist, right? The wealthy should not, I should say, or a lot of them do not do their own taxes. A lot of them have tax strategists, right? But typically when people are trying to get over on the government, they typically don't have a tax strategist. And this particular person did not have a tax strategist. They were trying to find ways to be a little deceiving themselves. So when it was time for them to actually pay for taxes, he tries to move money to that account in India to basically say, hey, I don't have the money to pay you, right? So when you owe the IRS an X amount of dollars, you can basically like submit for a hardship, which is one of the services that we offer. But in order to submit for that hardship, we have to see basically all of your finances. We need all your bank statements, any life insurance, any way that you make money. We need pay stubs. We need to see everything to basically say, okay, you make this much, but your expenses of living is this much, and you have X amount of dollars over. And with the money that you have left over, it may not be enough to pay the IRS back. So we can either say, hey, I'm sorry, I can't pay you. I don't have money, so we can get it reduced to zero. We can say, hey, I can. I don't got the 600,000 that you asking for, but I can pay you about 150, right? So that's basically what he was saying. Even though he did have the money, but he moved the money to India, and then again, when it was time for us, well, not us because I wasn't on his case, but when it was time for the people who was representing him to show his case or his finances, he moved the money. So now when I look at his bank account, it makes it look like he doesn't have no money, which was crazy anyway, because it should have showed that he did a transfer of $600,000, right? Which I don't know why he thought he was going to get away with that. And then on top of putting the rentals in his children's name and but still claiming the money, he was doing some Medicaid fraud. So basically, he was, when we say Medicaid fraud, he was basically adding on services to his patients' Medicaid that he actually wasn't completing, which was crazy. So this has happened more than once with a lot of physicians, especially if you are on Medicaid, because I feel like they take advantage of people because they think that you are not looking at your statement or bill when it comes in the mail, or you're not asking for your treatment plan at the end of your service. And so it's like, oh yeah, I said I, pulled 5 teeth and things like that, but you really didn't. And so now they getting paid for it. So again, he defrauded the IRS of $1.6 million. Um, he is scheduled to be sentenced. He will face a maximum penalty of 5 years in prison. As well, he'll be supervised, when released, and he has to do the restitution and things like that. So yeah, he could be going to jail for the maximum of 5 years. But I have seen this happen before, to where another doctor basically did Medicaid fraud, and he just paid the money back and he didn't go to jail. So typically, if he probably has the money, he probably won't go to jail, but who really knows? But yeah, that's it for the tax tea in the streets, y'all. These people is just lying. And then you didn't put the dang on rental in your kids' name. You just said F the kids. You didn't put the rental in the kids' name. And but then you still collecting the money. Just trifling, as my grandmother would say. Just trifling. But yeah, that is it with Taxi in the Streets, y'all. I went over my 35 minutes, like I said. Again, thank you all for joining. Share this with anyone that you may know who may need it. For the month of April, I am doing a budget challenge, 4 weeks, every Thursday. Come prepare. Let's make this money. Let's help you make millions. Let's help me make millions. And we all can be millionaires on a yacht, drinking champagne and living a life, right? Because that's what we want, right? Or living on your farmhouse, whatever your dream is when it comes to living your life, not even in just retirement, because we don't want to just plan for 40 years down the line. We want to plan for 10 years down the line. We want to plan for 5 years down the line. What does that look like? What does your 5 year plan look like? Where do you see yourself in 5 years? And whatever that answer is, that's where I want to get you. I want to get you there in that 5 years, whatever it looks like for you. If that means, hey, I'm just tax free or debt free, I don't have any student loans, I don't have any outstanding credit card debts. Let's go ahead and set up a strategy to help you get to that. If you say in 10 years, I want to make sure that I'm driving a Bentley and I got 3 pair of red bottoms. Let's help you get there, right? We don't want to just plan for retirement in the future, as far as, like I said, 30, 40 years down the line. We want to set a 5 year goal. We want to set a 10 year goal. We want to set a 15 year goal. And my goal here is LC Financial Solutions is to help you achieve that goal, right? Where do you see yourself? Where are you trying to go? And I'm going to help you get there, okay? Because I don't want to be the only millionaire. I need everybody else to be millionaires as well, even 100,000aires, billionaires, whatever your goal is. Let's help you achieve that. And the first thing that we're going to do by helping you achieve that is basically mastering your money, mastering that budget, figure out where you're spending it, figuring out where you can cut costs. Because when you think of a budget, we don't want you to think like, oh, this is punishment, so you just can't spend any money. Like, no, that's not what we're doing, but we want to make sure that we're not overspending any money to make sure we can help you reach those goals that you all are wanting to reach. Thank you all for tuning in. I'm going to let you all go. Tax Tea Thursday with Tish. I appreciate y'all. See y'all next Thursday, 8 p.m. Central Time. Thank you all. Have a great night.